Good morning, traders. Good morning, traders. Today we want to discuss two profitable bearish trading strategies. Two profitable bearish trading strategies. All right. In order to achieve consistent winning trade in a financial market, one must have high probability trading setups that one understands, one knows how to trade, and one can trade it, okay, anytime and anywhere. The purpose of this tutorial is to give traders true profitable bearish trading strategy that they can work on, that they can focus on, that they can master, that they can use, okay, and make a real profit in a financial market. But before we continue, though this is a bit exciting, I don't want trader to behave like a child. I want trader to adopt a professional attitude, all right? Which means, all right, now you watch the video on YouTube, it's out there, it's an information that we provide on YouTube for free. So when you watch it, okay, you want to digest it. So the first stage is to accumulate the knowledge. That's everybody can do that. You want to accumulate the knowledge, or in another way, to duplicate that knowledge. All right. So once you finish to duplicate the knowledge, the next stage is now to test it. All right. You test it with a demo account, or you have a trading account. All right. Just trade it. All right, without real money. All right. So by testing it or by using a demo account, now you want to see whether in real life does that method make sense. All right, and you go through different stages when you are testing it. So sometimes you say, oh, it didn't work, and then you ask the question, why it didn't work. All right, have I missed something? And then you go back again. The good news, which I like about YouTube recently, YouTube has done something fantastic, is that when you're watching a video, all right, suppose you are watching a trader were telling me, Joe, your videos are too long. I can assure you they are not very long. I watch videos of 2 hours, 2 hours, 30 minutes. What I like now that YouTube is doing, especially when I'm using my smartphone, is that when I watch a video, sometimes I do not have the time to watch the full length of that video all together, okay? But then because it's a subject that I like, when I go back again, YouTube will show me the video, and it will show a red line showing me where I have stopped, which is great. So if I want to continue to watch the video, I just pick it up from where I stopped before, and I can continue to consume it bit by bit. So for educational videos, if we want to cover some topic, sometimes it can be 50 minutes, sometimes it can be 20 minutes, or on average 30 minutes, and some video can last even 1 hour or more. All right, those are long form videos. But the good news now that you can consume it bit by bit, because information are provided, okay, on a timeline, which is great. All right, so now that you are testing the method, okay, probably you watch it to a certain degree, and then you go, okay, well, what's happening here? You are testing it now. So what you are trying to do is to develop the skills, right? The skills. You have the knowledge now, but you haven't got the skill yet. The most stupid thing one can do is to discount the experience of somebody who has been there and has done it. I think it's the most stupid thing one can do. It's like, for instance, you see a soldier that has been in the army, go to Iraq war, go to every war, and then you are just a soldier. You say, and that soldier is telling you, look, this is how you behave when you are fighting, and you just discount it. That's the most stupid thing you can do. So the experience comes. So what I'm saying to you, all right, is that when you learn it, now you want to have the experience. The experience will come with your first challenges. You see different scenario, all right, or sometimes the economy you play against you, and then you see, and then you master it with the experience. The experience will give you the skills, all right. All right, that's what I want you to do. All right, so talking about the two profitable bearish trading strategy, okay, I have here one example here. When a financial instrument, okay, goes up from A to point B, point A to point B, here it is, and start changing direction. This is very important. It starts changing direction here, so it goes up from here to here. Now it starts changing direction. Okay. We will use Fibonacci extension. We'll highlight the Fibonacci extension, 138.2% Fibonacci extension of that price level. Here it is. I'm going to color it into pink so you can see it on my chart. I want you to stay focused because see like a training, all right? When somebody's training you, you are to watch it. So though I'm not training you as such, all right? So think of it like that. So price goes up from A to B and then start changing direction, okay? And now you will apply Fibonacci extension. So if the price starts changing direction, then you can now apply the Fibonacci extension and you highlight 138.2% level. You just leave it on your chart like this. It's not yet ready as the price changing direction here. So you just leave that line there. So you know that it's 138.2% level. That's why you will notice that in my video sometimes you will say, John, why all this line on your chart? Why don't you remove them? Because I need them. All right? I need some of the line. And sometimes I move them and I'm not happy about it. All right? So here it is. So this is 138.2% level. So you have it ready on your chart. The next thing that you are looking for is a bearish chart pattern to be formed in the vicinity of that 138.2% level. So as you can see, this was going on. So price went up to this point, start changing direction. We are in the year 2010. Can you believe that? Now in 2014, the price reached that zone. You see, it went above it and changed direction. So what I say to trader, when the price is changing around, turning around a key level, you don't need anybody else's permission. You follow the price. So here it is. It went above the peak line and changed direction. So this is a top, yes or no? Look carefully. Look carefully, my friend. This is in 2014. Here we are. We are now in 2015. The price went back again in the same zone. Are you following me? Look at the shadow on top of this candlestick. It went up. Phew, it went up. See how it went up? To the same zone like here. I don't want to move my line. My apology to traders. I explained to you already. You understand the reason why I don't want to move some of my line. I can remove this one here. Okay, so in 2015, here it is again, in the same zone, in the vicinity of that 138.2% level, went up again and formed this shadow again. So now we have what? A double top in the vicinity of that 138.2% level. All right? This is a bearish trading setup because we have a bearish chart pattern in the vicinity of 138.2% level. When we see that, we will implement a top-down trading method to sell it. The good news is that we can apply this strategy for day trading, swing trading, and position trading. We can apply this method on any time frame, 3 minutes, 5 minutes, 10 minutes, hourly time frame, 30 minutes. We can apply that strategy. So you can go on any time frame and apply this strategy. So when we see the bearish chart pattern in the vicinity of that 138.2% level, it is essential that we apply a multiple time frame trading method to trade it and to control the risk. One more thing for new traders. This is about technical analysis. The economy news and the fundamental can change the dynamics of a technical analysis. So if you are trading forex and you see this, profitable bearish trading setup, you want to check the economy news that you do not, trade. For instance, the most challenging period for day trading and swing trading is between the 1st and the 8th of each month, and also between the 15th to the 20th of each month. So if we are trading during those times, we need to be very, very defensive from the 1 or the 1st to the 8th, from the 15th to the 20th. If you are day trading, the best time for day trading is when the first 2 hours when a market is open. New York and London, that's it. All right, New York and London, that's it. All right, so you are paying attention to those things. So you see your high probability trading setup, you apply a top-down trading method. Remember that. If you apply the top-down trading method in a challenging market environment, it may not work. If you apply a powerful trading method, but you are ignoring economy news, the economy news can change the dynamics of the technical analysis. I just want you to remember that. So as you can see here, the price went up from A to B, start changing direction. We highlight the 138.2% level, and then we see we are looking for bearish chart pattern. Finally, we see double top So price went up a little bit. Now form again, it didn't finish yet. In the same zone, we have again a triple top. And we will just continue to sell it because we know that it's in the vicinity of this 138.2% level or this double top, triple top. Those are bearish chart pattern. We can look for a head and shoulder chart pattern. So now the price here will form a head and shoulder chart pattern here. So we can call this one head, a left-hand side shoulder. Will form, okay, a head and shoulder chart pattern here. All right. If it did, well, game on. We have the tool. We must use a multiple time frame trading method. Do not just sell it because of the trading setup. This is one of the profitable bearish trading strategy that one can deploy. Okay, so you may say to me, Joy, why don't you use it right here? Because the price changed direction here. All right, so look carefully. So I put it here before, so I'm going to try to move it down here. So we were here now. So let's say we are here. So price went up from here to here and start changing direction. Yes or no? That's what we said. Okay. So what do? We apply Fibonacci extension to that price move, and then we highlight which level? The 138.2% level. Can you see 138.2% level? That's the line here. So what I'm going to do now, I'm going to move my pink line here. That's the 138.2% level. So price went up from here to here, pull back. We apply Fibonacci extension. We highlight the 138.2% level, and we are looking for what? Bearish chart pattern. Can you see some in the vicinity of that pink line? There is a top. See another shadow here, another top, and there was another top. We can apply this strategy for day trading and swing trading or position trading. And we want to use, very, very important, a top-down trading method without ignoring economy news and the fundamental. Can you see? Went up from here to here, pull back. Look around the pink line. What's going on here? Very powerful. But now you know the strategy. Now you need to go and learn to master it. Remember the steps. Price goes down from A to B, start changing direction. We apply the Fibonacci extension. We highlight the 138.2% level. We are looking for bearish chart pattern in the vicinity of that 138.2% Fibonacci extension level. When we notice that a bearish chart pattern is in place, it is essential that we apply a top-down trading method or a multiple time frame trading method. If you don't know what is a multiple time frame trading method or a top-down trading method, YouTube search those words and you will see videos from 24 Stock Trader YouTube channel, which will help you to understand what is a multiple time frame trading method or a top-down trading method. So as you can see, it's working beautifully, and it's nice to know, okay, this is the first, okay, profitable bearish trading strategy that you can apply. Okay, the next one here, next bearish, the second bearish, okay, profitable trading strategy that I want you to know is this. Price goes down. This time, you remember, so now we want the price to go down from A to B, point A to point B. Here it is. It went down from here to here. We apply Fibonacci extension to that level. I don't want to remove my line here, so I set my apology for that. I need those lines. This is New Zealand dollar, US dollar. We are on a weekly chart. As I explained to you, we can apply this on a 30-minute, on an hourly, on a daily time frame. All right. For swing traders, go to use the weekly chart to find your trading setup before using the top-down trading method. Okay, so went down from here to here. That's the first condition. If we start going up a bit, as you can see, we apply Fibonacci extension to that level. From here to here, we apply Fibonacci extension, and we will highlight, okay, the 138.2% Fibonacci extension level. So I have another pink line already here. So ignore that pink line. I'm drawing a new one here. You see the 138.2% level. That's the Fibonacci extension for this move. So you will highlight it. Okay. And then I'm going to color it again into pink. Pay attention to the first pink line, which I'm drawing now, this one here. So price went down from A to B, tries to go up a bit. We apply Fibonacci extension. We highlight the 138.2% level right here. Now what are we looking for? We want the price to break below that 138.2% level and to find a resistance. Can you see it? No, I don't think you can see, okay, too many lines on my chart. Look carefully. Look carefully, my friend. You see the pink line here? Look at this candle here on the weekly chart. This is the retest of that pink line. Break below and a retest. All right. So pay attention to the shadow of the candlestick, but sometimes they will not notice, so they want the price to rally up to test it. Sometimes you will see only a candlestick bar like this with a shadow. You see this one here, pure dark. All right. So price break below it. Now retest it. We will implement a top-down to the bottom. So if you're on a weekly chart like this, it's quite tricky. You know that it retests it already. And if you're on a weekly chart, you couldn't enter the trade here. But if you go, for instance, on a daily chart, you see on a daily chart 1 or 2 or 3 candles going up to retest it before they are followed by a bearish candlestick bar down. So you see the shadow like this. You can switch to the daily chart to see how the price went to retest that 138.2% level, and then you will implement a top-down trading method to sell it down. This is the second profitable bearish trading strategy. So we are talking about 2 profitable bearish trading strategy. The first one is where price goes up from A to B, start changing direction. We highlight the 138.2% level, and we want the price to go back to that zone and to form a bearish chart pattern, either double top, triple top, or a head and shoulder chart pattern, a bearish chart pattern at 138.2% Fibonacci extension level, okay, after a bullish move. All right. The second profitable bearish trading strategy consists of looking for financial instrument that went down from A to B. Now, if it starts changing direction, we apply Fibonacci extension. We highlight the 138.2% level. What are we looking for? Break below, retest, turn around. In all cases, once we identify the trading setup, we must implement a top-down trading method without ignoring the economy news and the fundamentals. Pay attention to the most challenging trading period, the 1st to the 8th, and also the 15th to the 20th. As always, one should test and retest the strategy until one masters it before going live. That's the best approach. The knowledge, okay, the experience, and the skill. All right? Those are the steps that you want to take. So those are the 2 profitable bearish trading strategy. So now you know the strategy, you know the steps, you want to know how to trade it. You see the trading setup, now you must implement a top-down trading method. If the signal fell, you are out. If you see the trading setup, but you have major economy news that are due, or we are in a most challenging trading period, you may decide not to trade it. If you decide to trade it, you want to be very, very defensive. As always, you will draw a warning line at the retest point. You say priority to bearish signal below the 138.2% level in this case. All right, very, very important. And also, when we have the bearish chart pattern, you ask to give priority to bearish signal below that 138.2% Fibonacci extension level. If you have any question or suggestion, put it in the comment section. And in due course, I will be busy recording another video to answer your specific question. If you're a TSTW24 trader for day trading, you see this trading setup, go to the first best time frame. Okay, to trade it, today trade it, trade the first 2 hours when day trade, when the first 2 hours when the market is open. You want to swing trade using the TSTW-SY008. You see the trading setup, go to the signal time frame and use the TSTW key 02 to enter the trade. Very, very important. For swing trading, it's better to enter the swing trade on Tuesday. It's completely stupid to enter a swing trade on Fridays. All right? Happy trading to you all, and speak to you soon. We are the TSTW24 traders talking about 2 profitable bearish trading strategies. Happy trading to you all, and speak to you soon.